Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market continues to be pretty choppy here. Market is actually down 0.2%, similar across the board. All the indices today. There's a lot of up and downs here. So pretty much this was yesterday here, right? So this is where it closed yesterday. It looked like we opened flat, and then we made a move in the first hour, and then a second hour you can see that my short-term moving average is acting as resistance there. Second hour we pull back quite heavily, it looks like, but the gap area is acting as support. We saw some dip buying activities there. Third hour, another fluctuations. Fourth hour came down, retest that gap support, came back up, a little bit of green candle there. Continuation on the fifth, but again, that micro term resistance is there. And then the last hour, we saw a little bit of push, but looks like not able to hold some of those gains. Came back down to kind of near to that level here. We've been looking at this level in the last couple days. And we're back at that 342 level here. So this gap that opened up on October 20th, which was looks like it was yesterday, right? So the gap that was open yesterday, we're still slightly open, very small, tiny bit of it. So you can see just very little bit of it open. Again, this is where it closed on the on Monday. And then we saw a gap up here. So there's a gap starting from here to here. So half of it is filled, half of it is opened. And it's been pretty choppy trading all around the last 2 days. So let's kind of zoom out a little bit and maybe we get a little bit of better picture of what we're dealing with here. So I zoomed out a little bit, just looking at last a week or two. So you can see in the short term of things, we're still in a downtrend. So yesterday, and pretty much this week, I've been labeling this market as bearish in the short term, and mostly because we have these lower highs and lower lows in place. So we are in a downtrend in the short term, and I think that's why, we're not able to find some traction to the upside. We see these pops and it's just it just dies out right away. See a pop, it dies out, pop, dies out. Again, just because we're kind of in that vicinity where the overall shorter term sentiment, the wind is blowing to the downside, right? So short term continues to be bearish. And if we zoom out a little bit more, then we see a midterm picture here. And this is the midterm picture right here that you see on your screen. So you can see that my midterm moving average is actually now starting to pretty much move sideways. That tells us that midterm trend is now kind of getting into the neutral level, right? So last night, I labeled this market as short-term bearish with midterm neutral to bullish. Neutral because my midterm moving average is now sideways. Right, we're not rising like we did here. We're kind of like neutral zone as it's moving sideways. However, I'm giving it neutral to bullish because in the long term, not long term, but in the midterm, you can see that we did cultivated higher highs, and we're just trying to figure out which level is going to be higher low. Is it going to be higher low here at 341, 342? Are we going to come down to maybe 338? Maybe possibly become a higher low, because that's how the market moves, right? We go down, go up, cultivate higher low, go up, cultivate higher low, go up, higher lows, higher highs. That's what we call an uptrend. So we are technically still in an uptrend in the midterm. We just gotta figure out which level we're gonna have that higher low cultivation happening. It's kind of difficult to say as of this moment. And we also talked about how this level becoming a strong, important pivot, right? Because that was that prior zone where we saw a lot of supplies there, here, right? There, here, here, tanked, tanked, tanked. And then we saw resistance there, and we saw finally a breakout, and we're kind of retesting that vicinity. So, but when you draw pivot level and support levels, you always want to give them enough room to kind of wiggle around. This is why I'm drawing the box here and not drawing just a thin line, because it could be 342, it could be 338, but I think this entire vicinity is going to be important. 342, 338, that entire vicinity. My longer term moving average, you see that pink moving average there? It's actually currently residing right on that 338 level, right? So my midterm is here, my longer term moving average is here. So overall, despite the fact that we saw some little bit of fluctuations today, the overall picture hasn't really changed since I've been analyzing this market last couple of days. Monday, Tuesday, Wednesday, today, it's pretty similar at this point. So we want to continue to give benefit of the doubt to the sellers in the short term, but we want to be more kind of a neutral in the midterm, neutral to bullish. And obviously we're bullish in the long term. Let's check out that oscillator here real quick. So we talked about the oscillator. Let's zoom back in here. We talked about that oscillator potentially forming that bullish divergence here with the slight higher low on the oscillator while the price cultivated lower low here. We talked about how it would have been much more potent if the oscillator crossed up here somewhere and there's much steeper angle to the upside like that, but it was kind of a slight higher low, so it kind of lost a little bit of its potency there. And you can see we did initially cross up, but not even able to come up here to the resistance level. We kind of stopped showing the middle of it, and at the last hour we actually crossed down. So we can see we saw this crossing down, we got this cross down, and we got another cross down. So we got 3 cross downs here, and that definitely tells us that we're in a downtrend in the short term. So with that crossing down, going into tomorrow, there's a little bit more bearish connotation, a little bit of more bearish element into this market going into tomorrow. So we got the gap area here. Best bet, best case scenario for the bears is gapping it down, because this support level has been acting as support for quite some time. In pretty much this entire week here, we've been holding above it. So, and that little tiny gap is still actually open. So if the bears come down, just fill that gap, we might see a short-term support. Nothing huge, just because that gap is so little. Even if we fill that gap, we may see a very little support, not too much. But if the bears let the buyers hang around too long, though, buyers going to find some momentum and then break out again. That's kind of how buyers like to operate anyway. If we just kind of go back a little bit, you can see how you let the buyers hang around sideways too long. Like you would have its ups and downs. You can see up and down, up and down, up and down, but it's like hanging around, and then out of nowhere you see the gap up and then they bring it up. So we're kind of in that juncture where bears really need to bring it down now. The bears don't want to see buyers hang around too long, because when you see that when you let buyers hang around too long, especially we're kind of in that elevated level in the midterm. What I mean by elevated is we did take out this lower high, and then we did make higher high. And so we are seeing that correction. And some people might even look at that as some sort of bull flagging pattern, right? Bull flagging continuation pattern. That's kind of what I mean. So that's why in the short term, we're in a bearish downtrend, but in the midterm, buyers might be forming some kind of a continuation pattern. So if you let buyers hang around too long, they are going to bring it up. So bears, what they need to do is that now that we did see that oscillator crossing down, and we did close the last hour with some weakness there, want to continue in that, want to continue to push the weakness. Gapping it down will be the best case scenario, and then we have another gap at 338 here, and that's probably where the bears want to go and re-challenge this gap area. We have a longer term moving average residing at 338. That's probably going to act as strong support. So I think it'll be important going into tomorrow. Right now that that bullish divergence is starting to fail, with this thing curling down. But keep in mind, there could be some kind of a whipsawing action too. Let's say if we see like some kind of shenanigan gap up or bullish move or something like that tomorrow in the first 2 hours, this thing could actually get right back up like this, and then kind of come up and retest that. So we're kind of right on the juncture where, you know, we do have a short-term bearish element, bearish sentiment in the short term, but we have to understand in the midterm, we are still cultivating uptrend. So bears want to continue with that momentum, with that lower highs that has, you know, the bears have cultivated. If bears keep it, not keep that momentum going soon here, I think bulls can bring it back up just because of the midterm sentiment is a little bit more bullish there. So we got 2 more days trading this week. I'll come back for you guys tomorrow and re-examine the situation. We'll go from there. Enjoy your evening. Good luck trading tomorrow.